Ever look at a company's financial report and just wish you could, get the main points without wading through pages of dense figures? Well, today that's exactly what we're aiming for. Welcome to the deep dive. Today we're focusing on Reliance Industrial Infrastructure Limited (RIIL) and their newest results. These are for the first quarter of the 2025-26 fiscal year, the period ending June 30th, 2025. Our mission really is to cut through those numbers, highlight the key trends, and figure out what it all means for you, the curious learner. We're basing this on their official media release, the financial filings, and the auditor reports, all fresh off the press today, July 16th, 2025. So let's jump in. Okay, so RIL has just put out these unaudited financials. Let's start at the top: total income. For Q1 FY25-26, it came in at 1,828 lakh. Now, looking back, that's actually a tiny bit lower, 0.8% down compared to the same quarter last year. And it's also down about 3.5% from the previous quarter, Q4. So on the surface, income's dipped slightly. But, a small dip there doesn't always tell the whole story, does it? What should we look at next?
That's exactly right. The top line is just one piece. Well, total income did nudge down a bit. The really interesting part is the net profit. On a consolidated basis, their net profit for Q1 actually went up to 310 lakh. Now, compared to last year's 290 lakh, that's a pretty solid 6.9% increase year on year. Yes, there was a small dip, about 3.1% compared to the last quarter, Q4. But think about it. Seeing revenue slightly decrease while net profit actually improves, that's quite something. It points strongly towards really good operational efficiency or maybe some smart cost management. For a company like RIL, that kind of result, it suggests they're really good at squeezing value out of their current operations.
That's a great way to put it. It's like keeping more of every rupee earned is maybe even more critical than just earning more rupees in the first place. Now, we often see these terms, consolidated and standalone results. Can you maybe quickly break down what that means for RIL? Why look at both?
Absolutely. It's a key distinction. Think of standalone as RIL, the core company, just its own operations. Consolidated, on the other hand, gives you the bigger picture, includes RIL plus its share from any subsidiaries, or like in this case, its associate company, which is Reliance Europe Infra. So consolidated shows the whole group's health, while standalone lets you focus on the main engine, the primary business itself. Both are important for, well, a full understanding.
Right, that makes sense. Group picture versus solo shot. Okay, so keeping that distinction in mind, let's dig into the consolidated numbers first, the group picture. We know the total income was 1,828 lakh, but you mentioned profitability. Look at the PBDIT. That's profit before depreciation, interest, and taxes, and it includes the associate's profit share. That hit 437 lakh. That's up 12.1% year on year, and wow, 21.1% quarter on quarter. That's strong.
Very strong.
And the profit before tax, also robust, 401 lakh. That's up 13.3% year on year and 23.4% quarter on quarter. So even with that tiny income dip, these profit metrics are really quite impressive.
They really are. And if you look at the earnings per share, the EPS, on this consolidated basis, it was 2.05. That's up a healthy 6.8% compared to last year. Okay, it dipped slightly, 3.3% from Q4, but still. And it's worth noting something the auditors pointed out. About 54 lakh of that profit came from the associate Reliance Europe Infra. But, and this is key, the auditors specifically mentioned that this associate's results were unaudited and, quote, not material to RIIL itself.
Ah, okay. So even though it's included in the consolidated total.
Exactly. It tells us the core IL operations are overwhelmingly driving these strong profit numbers we're seeing in the consolidated view. It's not really about the associate.
That's really useful context. It shows where the company's real strength lies. Okay, so let's pivot to the standalone view, now zooming in on just RIL's core operations. What's immediately striking is that total income is identical, 1,828 lakh. That really hammers home that the main business is driving the revenue train.
Precise.
But look at the standalone net profit, 256 lakh. That shows a nice positive trend, up 6.2% year on year and 2.4% quarter on quarter. And the standalone PBDIT, 383 lakh, also very strong, up 12.3% year on year, and get this, up 31.6% quarter on quarter.
Yeah, that QOQ jump is quite significant.
Right, and profit before tax on a standalone basis, 347 lakh, again, big increases, 13.8% year on year, and a massive 36.1% quarter on quarter jump. Even the standalone EPS at 1.70 showed good growth, up 6.2% YoY and 2.4% QoQ.
So what we're seeing here, especially with those standalone PBDIT and PBT numbers,
Yeah.
it really underlines that exceptional operational efficiency we talked about earlier.
Yeah.
When your core business profit metrics jump like that, especially quarter on quarter,
Yeah.
it suggests they are extremely effective at managing their existing infrastructure and services. They're not just cutting costs, they're optimizing.
Okay, so it tells a story of a really well-oiled machine, essentially.
You could say that. The fact that the standalone and consolidated income are identical just confirms the core business is the revenue engine. The slight differences in net profit just reflect that small, not material contribution from the associate in the consolidated view. It really paints a picture of a robust core operation driving this enhanced profitability.
All right, let's quickly touch on what RIL actually does. The sources say they provide infrastructure support services. What does that look like in practice?
Their main activities are quite focused. It's primarily about transporting petroleum products and raw water through their pipeline networks. They also mention other support services, which is a bit general but likely still tied to infrastructure. And the crucial point is who they do this for.
Right.
It's mainly for Reliance Industries Limited. So think of it as providing very specific, essential infrastructure support to a very large key client.
Okay, a focused business model. Now, speaking of focus, I saw something specific in the release about their future plans, or lack thereof. It explicitly states, the company presently does not have any expansion plans on the anvil. What does that signal for an infrastructure company like this?
That's a very telling statement, isn't it? It really defines RIL's current strategic posture. It suggests they're not chasing aggressive growth, not looking to build lots of new things or enter new markets right now. Instead, the focus seems to be purely on optimizing the stable existing business they have. For someone looking at the company, it might signal reliability, consistent earnings from their established operations, and that deep relationship with Reliance Industries. It's less about high growth, more about perhaps steady returns and efficient management of current assets.
So stability over expansion, perhaps.
Potentially, yes. And this focus is also reflected in how they report their segments. They basically just have one, infrastructure business. No separate reportable segments. It reinforces that narrow, deep focus.
Okay, we've got the numbers, the business model. What about the auditors? The people checking the homework, so to speak. What's their take? We know these are unaudited, but they did undergo a limited review.
Correct. The auditors are Chaturvedi & Shah, LLP. They performed this limited review, and their conclusion is pretty clear. They issued unmodified opinions for both the consolidated and the standalone results.
Okay, let's unpack that. Unmodified opinion. What does that actually mean in the context of a limited review? How much weight should we give it?
Good question. A limited review isn't a full audit. It's less extensive. It mainly involves asking management questions and doing analytical checks on the financial data. So it provides what accountants call moderate assurance. It means the auditors are reasonably confident, based on the review, that they didn't spot anything indicating the financials are materially misstated. It's not the same deep dive as a full audit, which involves much more testing.
So it's like a checkup rather than major surgery.
That's a decent analogy, yeah. An unmodified opinion here basically means, given the scope of our limited review, we didn't find any major problems. It provides a good level of confidence that the figures seem okay and follow accounting rules based on that level of scrutiny.
Got it. And these results were also reviewed by the audit committee and signed off by the board.
Yes, standard procedure. Reviewed by the audit committee and then formally approved by the board of directors, all on July 16th, 2025.
Okay, so let's try and sum up our deep dive on RIL's Q1. What we've seen is a company with a pretty stable total income, just slight dips. But the real story is the profitability, notable improvements in net profit and pre-tax earnings, especially from the core standalone business. This really points to strong operational efficiency, doesn't it?
Absolutely. Excellent cost management or optimization, or likely both.
And their business remains very focused, providing key infrastructure services, mostly to Reliance Industries, with, interestingly, no current plans for expansion laid out.
Very defined niche.
And importantly, the numbers, while unaudited, got a clean bill of health from the auditors. Through that limited review process, those unmodified opinions give us a level of confidence.
Right. It paints a consistent picture.
Yeah.
Efficient, focused, stable for now.
So that leads us to our final thought for you, the listener. Considering RIL's steady service to a major client and their stated lack of expansion plans, what does this kind of profile tell you about stability versus growth and how we view companies? Is a focused, potentially reliable earnings stream more appealing to you than perhaps a higher growth, maybe higher risk strategy? How does a company like RIL fit into your perspective? Something to think about. Until our next deep dive.